Good morning, and here are your top 5 stocks to watch out for in trade. Well, it begins then with Maruti, that's in focus, as the automaker, the country's largest automaker, is looking to increase their prices of their model range. This is from January 2021. In fact, the automaker has gone ahead and said that the cost of vehicles has severely been impacted due to the various input costs, and that it is necessary to go ahead and pass on this impact to the customers. So the prices are going to vary for different models is what they've said, and in fact the operations were hit, remember, as the lockdown had been imposed. Gradually they did manage to build up their overall production. In the month of November, remember, the total production was up by 5.9% to 1.5 lakh units. Getting a move on then, IRCTC, another candidate to keep on your radar, as the government of India has proposed selling up to 2.4 crore shares in IRCTC, which is about 15% of the paid up equity capital of the company via the OFS route. The government has also proposed an additional share sale of 0.8 crore shares, which represents about 5% of the paid up equity capital under the event of oversubscription. So combinedly, the base offer size and the subscription option represent about 20% of the outstanding equity shares of the company, or close to 3.2 crore shares. This share sale is going to take place in a separate window on the stock exchanges today and tomorrow, and retail investors will be allowed to place their bets come tomorrow. The floor price for the offer is 1367 rupees per share, and it's about a 16% discount to yesterday's closing price at about 1680. Moving on then, TCS is in focus, and it's largely on the back of the buyback news that the company has gone ahead and approved. In fact, TCS is going to be approving a 1600 crore rupee buyback, which is what they had approved. It's 16,000 crore rupees. It's going to commence on the 18th of December, close January 1st, and that's going to keep the stock in focus. M&M as well is in focus, as the auto giant has subscribed to about 1,050 equity shares. This is of Sampo Rosenlew, which is a Finland company, a subsidiary of the company. Pursuant to the said transaction, the voting rights now of Sampo is going to increase from 74.9% up to 79.1%. SBI is on the brokerage radar. Goldman Sachs has maintained a buy with a target price of 367, saying they've hosted the chairman of SBI at their CIO tour, and they understood that the asset quality stays the same at 2.5% of the new NPL and restructured loans. That the asset quality is playing out as per the guidance. Recovery momentum seems to be gathering pace, and that's been driven by retail as well as SME credit, and they are committed to improve their return ratio assets to about 1% by FY23, and they're focusing on digital and enhancing their with strong performance on their digital app.